Good afternoon or good evening. Welcome to the Accendo Trader Group. This is our weekend wrap-up trade plan for August 31st, 2008. Happy Labor Day to you and yours. This is the Accendo Traders Group. Again, effective video trade plans delivered daily. Each weekend, we go through a routine to help prepare ourselves for the week. We look at our watch list and set our stops and alerts, check the news. We want to make sure that we see what some of the experts are saying about the market, check the sectors for trends and see what new trades we should be looking at. Always set alerts for our new trades, but most importantly, especially on a weekend like this, we have an extra day off. We want to make sure we have time to spend with our family. So when we look back at last week, we can see that all the indices ended down, not down that much for the week, but the theme kind of continued, and that theme of last week was, oh, where did the volume go? And again, we really had a very lightly, thinly traded week for the week. We have big swings, basically up, down, and that's what's happened when there's not a lot of volume, there's not a lot of conviction, the market is easily pushed in either direction. And we saw that, and after all of the ups and downs, the market basically ended up down 0.7% for the week. The volume was the lowest level for the year, and the net result was, again, a swing trading from up and down, up and down. The energy sector is still in anticipation of Hurricane Gustav. Watching the news this weekend, it certainly doesn't look good, and certainly our prayers are out to those families in that Gulf area. And the financial sector actually showed a little signs of life with Freddie and Fannie. Not a lot of corporate headline news. Again, we're kind of winding down on our earnings, second quarter earnings. We're going to get ready to begin a third quarter earnings. We also have, again, as we said, Fannie and Freddie were up for the week with their financial sector. Personal income was the only really disappointment this week for economic data. We had basically good news on existing home sales, new home sales, consumer confidence. We even had the GDP revised up for the week, and that showed that the GDP is showing that we're a long way away from recession on technical definitions. Certainly, we all feel the pain a little bit. And the revision puts GDP above the long-term trend. I believe it was revised up to 3.3%. And some benefits was obviously, or some contributing factors were the stimulus package, and that with the weaker dollar, we had good exports. So this week, we're looking at nothing tomorrow, obviously. The market's closed tomorrow. A little bit there on Tuesday. Wednesday, we got the Fed base book to look at. Thursday, we got ADP, and of course, the big bad boy is going to be on Friday. We got non-farm payrolls. That's certainly, we got more impactful news coming out at the end of the week. So again, the market is closed on Tuesday. On Monday, on Tuesday, we've got a little economic news, no real big earnings, not even these, these aren't even big. Again, we're at the end of our earnings season, and you can see the split plates we're looking at. So not a lot coming out on the news front. Again, maybe with the traders coming back from holidays, we can get some volume and start to get some conviction. So let's see, even with the thinly traded market, let's take a look at our sectors and see which ones are moving what direction. Okay, so now we're going to take a look at the sectors, and I'm really going to take the same standpoint that I talked about last week, which is with no volume, without really seeing what's going on. I'm not going to go, you guys know I normally go, here are our bullish sectors, here's our bearish sectors. Until the traders come back, give us a conviction, tell us which way they think the market should be going. We're really not sure. So I'm just really going to talk about a couple sectors that caught my eye, and we'll see what happens from there. And that first one here is agriculture. You can see we come up on the light volume and tested the 50, possibly pulling back. Also notice when we tested the 50, we made a newer low, tested the 50, made a newer low, tested the 50. We'll see. Which way is this going to go? Are we going to go higher or lower? So agriculture caught my eye. Same thing with energy. We'll have to see how Hurricane Gustav plays. Will energy stocks start to rally off of that? I know the government talked about releasing some of our reserves to combat that a little bit. There was all kind of hype about oil going to $5, definitely back to $4. We'll have to see. But oil, energy is another sector, and you can see that with the drillers also. What ways are they going to go from here? Then we have resorts and casinos. That kind of caught my eye. What are we going to do here? We're going to kind of break for some new highs here, or are we going to fall lower from the 50? Shipping. We haven't talked about shipping in a while, but this is just one. The tested the 50 new low, tested the 50. Are we making a new low here? Or are we going to finally break above the 50, which has been acting as resistance? And also with that, in the transportation sector, we also have railroads looking very nice. We've been looking at UNP and BNI of late. And not great volume, but a little increase in volume as we're heading up here to this resistance of 1025. So those are really the 5 sectors that caught my eye as possibly doing something. Agriculture, energy, resorts, shipping, railroads. I may have to come back, and I suggest you do it too, and look at these sectors as the week continues. Normally we really take a hard look at it only on the weekends, but as the traders come back, maybe we'll get some volume and we can see if they're moving any of these sectors one way or the other. All right, as we move along, we're going to go to the education portion of our video. And we're going to go back to Trading in the Zone by Mark Douglas. And we're talking about reacting to loss. And last time we were talking about the danger or the trap that a lot of new traders fall, and even experienced traders fall into when they don't take responsibility for their trading. And one of those, as Mark goes on to say here, one of the major psychological obstacles that you can occur by not taking responsibility is that you block yourself from the true information of that trade. You block yourself and begin to mislead yourself about why that trade went wrong, or you block yourself or mislead yourself of why you can't consistently trade for a profit. And you begin to think to yourself, if this wasn't my fault, this was the market, and the market did this to me. And so he goes on to give an example about a new trader who starts off with a winning trade, and suddenly has a losing trade, and he feels that emotional pain. However, that emotional pain did not cause that person to stop trading. And what this traders have a tendency to do is they feel like, well, you know what, this trade went wrong. Okay, that's all right. You know what, I made a lot of money, especially, when the market's trending, it's not that hard. When the market's in a bull market, even guessing, you can probably make some money. So, new traders, even some experienced traders say, well, you know what, I know that this went wrong, but it wasn't me, it's the market, and here's how I'm going to beat the market. I'm going to learn some more. I'm going to go study some new strategies, some new market techniques, and if I made money without knowing a single thing, how much money am I going to make when I know a lot about the market? And so they go on and do this, go to this seminar or that seminar, or read this book or that book, thinking that now that they know more about the market, they'll now make more money. The only problem is that being smarter doesn't necessarily mean or does not translate into making more money. And he goes on to say that there's one big problem with this, that few, if any trader, ever have the awareness about the damage, about what's wrong with the trade until the damage is done. And that's where we're going to stop. We're going to pick up there and talk about what is this big problem, what is the big factor that people are missing by thinking that learning more about the market is what's going to make them more money. We're going to talk about that the next time. But again, this, as I always like to give my own personal experiences, and you'll see it so many times as you interact with more people, and as you interact with people who are in the market, you'll see that they're going to jump. 1 minute they're following this person, the next person they're following that person. 1 minute they're trading options, the next minute they're trading stocks. 1 minute they're trading Bollinger Bands, the next minute they're trading credit spreads. It's not about market knowledge. It's about how you think about the market. It's about how you interact with the market and how you set up a plan to be successful in the market. But we'll talk about more of that the next time. So, to get the full version of our podcast, you have to go to subscribepodcast.html, and that will get you our podcast version. If you're ready to become a subscriber and get our daily video every day, you get our video. We talk about our new trades and the things we're looking at, why we're looking at it. It's certainly a great way to put into your criteria, your checklist. There's our link, accendotraders.com/video HTML. We always appreciate feedback, and get the blog. The blog also has our weekly trade plans. Our Sunday trade plans will be there also on our blog, and some great articles, new ones coming out each week. Blog.accendotraders.com. Thanks, guys, and have a good week. As always, trade at your own risk. Happy Labor Day.